Jeff, good morning. Thanks for being with us. I know that you are focused on a longer time horizon. In the past, you've looked to high-quality growth companies like Datadog and Twilio, strong fundamentals, but even these companies have been killed in this market. So what do you do here? Some have suggested on our air this morning that maybe investors should sit it out.
Well, Deirdre, that always seems to be the advice of folks when we're in a nervous market, and we're certainly in a nervous market. It's been brutal for tech stocks over the last 6 to 12 months, and in particular, the last 90 days have been really rough. And, as you mentioned, you're seeing great companies we consider great companies that are core to cloud infrastructure in the way the next generation of our economy is going to be built. Companies like Twilio and Snowflake and Datadog, and some of these companies that had held up well through the downturn in tech over the last 6 months have even gotten hurt in the last few months. I tweeted out yesterday, Twilio is trading at 3.5 times forward sales, which is a level we haven't seen in a very long time. So, it's hard when the market keeps coming down every morning and you feel like you're catching a falling knife. But we believe over the next 3 to 5 years, if you've got that long-term time horizon, these are going to be high-quality names to own.
So, Jeff, what did you make of Glenn Hutchins' sound that we just ran, saying that this is an Armageddon? If he does see a recession, which he's expecting, it will be a short one. I really liked your thesis on small businesses. That isn't something we think of typically that you can bet on in public markets, but you do have a few names. And you also say that if the economy is going to recover, that's a good place to be.
Yeah, it's such a great point. So we don't, a lot of small businesses aren't really tradable in the market. And so we don't talk about them a lot. But small businesses make up 40% of U.S. GDP. 60% of Americans work for a small business. So it's a huge part of our economy. Last week, we launched our S&P Tech 50, which is a list of 50 of the best private technology companies focused on small business. And obviously in the public market, you got companies like Square and RingCentral and Shopify and Zendesk that cater to small businesses. So if you're looking for a way to play the rebound, and in many ways, we'd argue this is one of the more interesting bets you can make, because coming out of COVID, who benefits, who wins as people go out, they eat in restaurants, they go back to doing things live and in person. It should be the American small business. And one way to bet on that is by buying these tech names that supply technology to those companies. And so we highlighted that with the S&P Tech 50. Obviously, the companies I mentioned have gotten beaten down quite a bit over the last 12 months. But over the long run, we are seeing very positive signals with small business. I'm on the board of several S&P Tech companies. We saw as many of a third of workers miss shifts in Q4 due to the Omicron variant. We're now seeing that go away. We're seeing people showing up for work and a rise in purchasing behavior for tech in small businesses. But the point that Morgan made earlier and Glenn was just highlighting is the big issue for small businesses, which is labor. It's just really hard to attract workers. And so those businesses are still struggling with that. And we've got to figure out that if we want our economy to rebound.
Hey, Jeff, are we entering more of a Hobbesian state of nature market, lions and gazelles, where you've got companies that are going to be on the hunt to consolidate, and you've got some companies that might be very nice, beautiful, swift companies, but they're the slowest gazelle. They don't necessarily have the resources on board, haven't raised the funding to be able to run faster than the others, and therefore they might get done in.
John, I think this could be the story of 2022, which is a tale of two cities. If you're a company that is well capitalized, has a strong balance sheet, you can play offense. And we saw this back in the great financial crisis with companies like Salesforce. They were able to. We're seeing that right now. If you're, IPOs, the average tech IPO from 2021 is down 41%. Not a good signal, but those companies are very well capitalized. They've got strong balance sheets and are ready to play offense in 22 and 23. And so we are seeing a little bit of a tale of two cities. If you're a private company that raised capital last year and has 18, 24, 36 months of runway, 2022 looks pretty attractive. You can play offense, maybe you can acquire a smaller competitor. Those companies that have to raise capital or don't have a strong balance sheet or don't have great gross margins or free cash flow, this could be a challenging year. And I agree with your sentiment.